Okay, we had the euro trade down, and just a little quick bounce here right ahead of 1360 area. A little bit of a hammer candle there, a little doji, and then we moved higher. I just want to show you, I'm going to run a quick Fibonacci retracement here just to show you some quick levels. All right, I just want to run this down here. Now, I'm actually going to run this on 5-minute chart. Now, a lot of people will tell you, well, using Fibonacci on 5 minutes, that's a little silly. Well, believe it or not, it can hold up from time to time, especially when you see a nice protracted move lower like we just saw. So if you see here, okay, right at the 50% retracement level, sure enough, we've got euro butting up against that right now. Although the trend on the short term looks like could be a little bit higher. So as we can see here, we're breaking through this level. All right, we've got euro trading higher. All right, we're ahead of the Bollinger Band outside. It looks like perhaps a strong move. We've got stochastics also moving higher. So perhaps this next level up here at about 144.56 could be some short-term resistance. So we're going to see what happens there. But basically, the idea behind the way I trade, it's called price action trading. The idea is that we're looking for different support and resistance levels. We're going to use 5-minute charts to do our day trades. We're also going to use some of the longer-term charts, like, longer term, as in 30-minute or 2-hour charts to find some different support and resistance levels. And the basic idea, it's just pretty simple. We want to try and buy ahead of support. We want to try and sell ahead of resistance. And that's sort of how we're going to enact our trades. So if we can get low-risk opportunities, okay, at times that we can get in, and when I say low risk, I mean, a couple of pips here or there, 10, 15 pips, those are going to be trades that we're going to be apt to take. So we're also going to consider what type of candle pattern is forming at that resistance level. Perhaps if there's anything happening with regard to the Bollinger Band or the stochastic setting, which is a 553 setting. I don't know if everybody can see that okay, but it's a short-term setting. So we're going to see if we're getting to an oversold or overbought territory, which just could be an additional confirmation for us that a trade may be good. So in any event, this is what's happening with euro. We're still moving a little bit higher, and at this point, I'm not inclined to buy it. A lot of people, when they place their trades, they say, well, it looks like it's going up. Well, that's great. There's a lot of times when you can look at a chart and say, sure, it's going up, but sometimes, the risk may be just a little bit too high for where you want to place your stops. Now, I don't like taking stops and just, using arbitrary pip figures like, oh, I'm just going to buy it here and place a 10 pip stop or a 12 pip stop or whatever fits in with my risk to reward requirements or my overall risk tolerance. At the end of the day, the market doesn't really care what my risk tolerance is, whether it's, 10 pips, 8 pips, 12 pips, 50 pips. Okay? What the market does care about is these support and resistance levels. So that's what's going to be important going forward. So this is what's going on with the euro. We're going to keep an eye on it right around this level. Looks like we're setting up a little bit of support. Perhaps there is an opportunity to do maybe a quick scalp here. Let's just look at this on this 1-minute deal. Now, somebody asked about this earlier for the 1-minute scalping setup that I use. And essentially what this is a Heikin-Ashi chart on a 1-minute chart. Okay, we're looking at Euro USD here. And what this is telling us, there's also a 3 Bollinger Band setting. So what that means is we have a 1 standard deviation setting, a 2 standard deviation setting, and a 3 standard deviation setting. And basically what we're looking to do is we're looking to scalp, okay, in between these different settings. And as each area moves higher, okay, we can potentially scalp beneath or above the previous setting. So right now we've got this was a pretty nice little move higher here on the 1-minute chart, but we see that we have a red Heikin-Ashi candle forming. If we get a breakdown of this, perhaps we could sell it and think maybe we're going to come back to this middle line, but not inclined to do this here quite yet. Let's see here. Someone was trying to buy at 144.10 but missed. It happens, right? Okay, we're going to come back to euro in a second. Somebody wanted to take a look at the pound. All right, here we go on the pound. You can see that the earlier highs today were up at about 163.63. What I'm going to do is I'm just going to drop back here to a quick 30-minute chart and see if we have anything happening as far as support or resistance goes. Well, you can see here this was earlier today where that previous high was before we sold off, coming into the the European session as it happened. But recent highs right here, 164. And more importantly, 164.25. So that 164.25 is an idea or a level that I've sort of been keeping an eye on. And I'm going to continue to keep an eye on that. Let's see here. Okay, question about support and resistance. There's a lot of different types of support and resistance. And yes, different people like to use different levels to figure out their areas. It really comes down to personal preference, trading strategies, and that's what's nice about the market, is that everybody can have something different. Okay, I like to use Fibonacci levels when I see something like, this euro, where it was in a nice, pretty protracted trend, whether it's, a downtrend or an uptrend. Okay, I can use that on a short term. On a longer term chart, I find that they work a little bit better. Other people, as you mentioned, like to use pivot points. All right, I don't tend to do a ton of scalping, so I don't typically use the pivot points. I feel like, people like to scalp in between those points, and that's fine if that's what your strategy is. Other times, support and resistance. Okay, I'm talking about horizontal levels, swing highs and swing lows. All right, and then sometimes you have the diagonal support and resistance when you're in a trend. So, you could draw a trend line like this coming up higher, and as soon as you got a break of that trend line, you could potentially sell. So yes, there are many different ways to view support and resistance, but when I'm trading on a day chart, on a 5-minute chart, all right, I'm not as concerned about trend that's happening, although if it isn't a very identifiable trend, be it an uptrend or a downtrend, obviously you want to pay attention to that. You don't want to fight the trend, okay? But at that point, you're going to be looking to try and buy in using either pullbacks, if it's an uptrend, or sell it using pullbacks, all right? Or you're going to be looking perhaps for a reversal if it can reach a support or resistance level and put in some of the identifiers that we would look for when we look for reversal candles. So that's the basic tenets behind how to use the support and resistance. Let's see here, Mike. In the meantime, I want to go back to pound here. All right. Now, I'm sorry, we're sort of all over the place and what's going on. It's a constant battle, obviously, when you're trading. You're looking for opportunities. You're looking for different things to do. Right now, we're sort of getting towards levels that look like they're coming on resistance, whether it's this Fibonacci resistance here at the 61.8 retracement level, all right, or if it's just the previous swing high that we saw in the pound. We're sort of getting what I'd call a little bit toppy. And, when things start to get toppy, that's when I'm thinking, all right, I'm looking for a reversal candle of some type. Now, when I look at the pound here, I can look at this candle right here, this 850 candle, and say, well, that was a pretty decent reversal candle. But you can see it kind of pulled back and it's still coming higher. So right now, looks like we've got a little bit of resistance happening here. Okay, but I'm not certain that this candle formation has really told us anything significant. If we could see a quick, spike higher up here ahead of 163.50, which, again, the law of round numbers, a lot of people like to use that just because it's easy to do. That could potentially be an area of resistance as well. But, when I look at this candle formation, I don't see anything that tells me that the buying's exhausted right here. And in fact, I can see the stochastics just waiting to catch up here before we hit this overbought area. So perhaps we're going to get a spike to 163.50, which at that point, perhaps then I might say, maybe there's a reversal happening here, but not just yet. So, this is part of the, sort of analysis you have to do as you're going through. And you got to ask yourself, is this the time when I want to get in? And a lot of times people get into trades too early, so the risk is too great. Or sometimes, you're too late and you miss it because the risk is now too great. And, you have to determine to yourself, well, what kind of risk am I looking to take on each of these trades? And because I'm on the 5-minute chart, I like to try and keep the risk as low as possible. Okay, I'm either right and the trade goes in my favor, or I'm wrong and I get out, I reevaluate. So that's sort of why I like the 5-minute versus the 10 or the 15-minute, for example.